The World Bank says the repurposing of the Komati plant will enhance energy security in South Africa. It says the power sector is a major contributor to greenhouse gas emissions in South Africa, accounting for 41% of its CO2 emissions, and that the aim is to move away from an old and inefficient coal-fired power fleet and to scale up the use of renewables by 2030. But analysts say that this move will not help to improve Eskom's efficiency and reduce load shedding.
The last unit to be shut down was operating at over 75% energy availability factor. So they want to tell us that in the next 2 to 3 years, they will bring on board the so-called renewables, whose energy availability factor is way less than 25%. So it doesn't make sense at all.
Kadima reiterated that this loan will put a heavy financial burden on government and has called on government to consider deploying renewables off-grid to avoid high tariffs for electricity.
In fact, this loan and the very decision to shut down coal-fired power stations carries with it a heavy financial burden, because Eskom, when it releases its financial results, which are already delayed by more than 2 months, when it releases them, it will have had to take an impairment charge where they have to write off 15,000 megawatts of capacity that they had on their books.
The World Bank says the project will create economic opportunities to benefit 15,000 people, and that community-driven projects, skills training and business development services are expected to create jobs in agriculture, manufacturing and digital technology. Naledi Matlapeng, SABC News, Johannesburg.